Hi everyone, this is Mark from Stocks and Cash. It's January 16th, 2018. I'm going to go over my analysis of the SPY and the Qs today. I'll show you what I'm holding, and I'll also show you a trade that I kind of like for tomorrow as well. So let's just jump right into it. The SPY, which basically follows the S&P 500. You can see that we had a black candle today. We opened above yesterday's high, went up a little bit, but ended up closing below the open. You can see that we didn't even touch this ascending trend line here. Haven't yet tested the breakout level of 275.35, nor have we come back to the 80 MA. So there's definitely some room for the market to kind of move sideways or come back and test these levels. But I don't foresee a huge sell-off. MACD is still positive. Yes, the Stokes and the RSI are kind of overbought, but going on what I'm seeing right now, it looks like we should probably continue the uptrend. It's not going to be up in a straight line like it has been most likely. Again, we'll probably see some sideways action, but ultimately we should resume the uptrend. Now, keep in mind, I'm kind of looking short term. I'm not looking long term. It's quite possible over the next few days that could roll over and my analysis will change, but for right now, what I see is some bullish continuation over the next week or so, after some sideways movement or maybe even some retesting. So looking at the Qs, pretty much the same story as the SPY. The Qs kind of follow the NASDAQ. Also in an uptrend here. If we draw the trend line, still intact. Excuse me. And we can still expect some sideways movement, maybe some retesting of the breakout level on the 80 MA. But again, the MACD is still bullish, despite the RSI and the stochastics being overbought. I think we still have some potential room to run up eventually after some sideways movement and some retesting. So taking a look at my holdings here, I bought Apple today, and I'll go into more depth on that. Down a little bit on those options that I bought. Disney kind of pulled back from where I was, but I'm still up. HD, I'm up still, 26%. Johnson & Johnson up 23%. Walmart is flat. So I'll kind of go and talk about each of those right now. So Apple, let me show you why I got into Apple in the first place today. So you see the Apple kind of had a morning star type candle here, which is a bearish sentiment, but it parked itself right around the breakout line here of 176.34. The actual close was, let's see, 176.19, so it's a little below it, but it's in the ballpark here. It's got more support at the 80 MA. It also has support here at this little gap that you can see. Zoom in a little bit more. Actually, that part isn't even a gap now that I zoom into it, but nonetheless, we have some support here at the 80 MA if it decides to pull back a little bit further. I'm still expecting to at least get to my first target here of 182.13. I don't expect it to be tomorrow, maybe even not this week, but I think we'll get there eventually. So let me show you the 5-minute chart and show you why I get into this trade. It kind of goes hand in hand with what I was talking about yesterday on the 5-minute rule. So as you can see, this is the 9:30 candle. It was a doji. It had a low down here of approximately 179.19. Had a high of, well, I can tell you exactly what it was. The high was 178.15. At the very next 5-minute candle, we got a close above the first 5-minute candle. So we closed at, let's see, 178.20. I saw that close and I decided to get into the trade. Now you can see it ran up early in the morning, and then around let's see, 10:20, it decided to end its up run and start a pullback. Now I could have gotten out at the low of the first candle. I'm allowing myself some extra risk, but that would have been a viable spot to get out depending on what your risk tolerance is. I decided to stay in the trade, And again, I'm looking for it to probably move a little sideways, maybe pull back slightly more, but ultimately continue on higher. So looking at Disney. Disney had a pullback today. It actually opened right around my target, 113.16. Let's see, open 113.07. So it would have missed my target. Well, actually, no, the high was 113.16. That probably happened very early in the day. I didn't have an order in to sell. I should have had that in. Lesson learned. I should have had my order in to sell at 113.10 or 113.16 according to my trading plan, and I waited for the market to open. By the time I put the order in, it just kind of descended throughout the day. Now again, similar to the SPY and the Qs, the Disney is still in a bullish uptrend pattern. It's still making higher highs and higher lows, although this could be an anomaly depending on what happens on the next day. And it could be a sign that it's going to roll over. So I'm going to give myself a tolerance down to the 21 EMA, which is 109.72. That's approximately where I entered the trade, so I'm not really losing anything on this one. It was just kind of a wash, which is fine. Good experience to get into a trade and see what happens, and a good lesson learned. You know, I should have had my order in first thing in the morning. I probably would have sold my shares and had a profit, but it is what it is. Again, I'll have the appropriate stop in for tomorrow in case Disney does decide to roll over. Just taking a look at Home Depot. We had a kind of a morning star pattern yesterday, and I'm not sure we would call this candle today, but it was definitely a down candle. That being said, again, we're still in an uptrend. I'll still hold on to Home Depot until it back tests this first target here that we've already passed, 193.29. The 80 MA as well are all kind of lining up, so that could serve as good support for Home Depot. You see that it's ridden essentially the blue line here, which is the 80 MA. And typically as we get away from the moving averages, the stock kind of wants to come back to them. And so that's why you'll see, you know, you saw back here for a few days, a couple of measly down days that kind of tested that 80 MA, and then we got a bounce off of it. So we might see something similar here as the 80 MA continues to move up. You know, we might see some sideways to slightly downward action in Home Depot. But I'm still looking for a 202.27 target to get out of my call. Probably my stop will be just below the 80 MA. So I got some room here for it to move around, wiggle around before I potentially get stopped out. But again, I just need to make sure I manage my risk. I don't want to have this, you know, kind of free flowing and you know, 10 o'clock everything looks good, and I come back at noontime and there's a big black candle that's decided to come back and retest the breakout point. So you've got to be aware of that and make sure you stick to your trading plan. Johnson & Johnson had a decent day today. Unfortunately, it was another Morningstar looking candle, which is not a bullish signal. Doesn't mean we can't continue on, but it didn't reach my price target, so I am still in. I think I'm going to move my stop up to the low of this candle here on 112, which I believe was Friday, just to kind of protect my, the profit that I've already made. It might move around sideways. It might come back and test the breakout at level of 144.46. Or we could have another up day. I mean, we've had, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 basically bullish candles in a row. So you would think that Johnson & Johnson is due for a little bit of a cool off here before it makes its next leg up. So it's just something for me to keep my eye on. We'll see what happens there. Walmart. I still like this trade. I'm about flat on it, on my position. Just a black candle, didn't really go anywhere today. But I think it has potential to bounce off of the breakout level here around 100.1. The ADMA is around that level too, so that it provides some additional support. And I'm still looking to see this go to 103.85. Now similarly, I still need to put a stop in. I'll probably put it at the 21 exponential moving average, right around this level here. It's just what I'm comfortable risking for a potential large profit if it decides to take off. That's not to say that I can't get back into a trade. You know, if this thing came down to, let's say, the 50 EMA, 55 rather EMA, or maybe even to the 50% retracement line, I mean, this could bounce back up again. Gaps do like to fill, as you can see here. There's a gap, so it's possible it could come down and fill the gap if there's weakness in the market. But you know, I can always get back into the trade depending on the price action. I'm looking at these trades short term, you know, within a couple of days up to maybe a week or two at most. So not looking for super long moves here. So that kind of covers what I'm holding. The one trade that I do like tomorrow, and it is bullish, is Under Armour. You can see it's been in a downtrend for quite a while, over a year now. And to me, it looks like this downtrend is continuing. We had some kind of maybe a fake me out kind of rally here. You can see there was this trend line that was starting to form, and then we had a very big bearish candle here today. The Stokes are heading into oversold territory, but the RSI still has a ways to go. MACD is bearish. It's still above the 0. But it has a long way that it could come back down, as you can see historically. I mean, it's come all the way down to minus 1.3. It's currently at, let's see, currently at about 0.25. So, I mean, there's definitely room for this guy to keep on coming down. The price is at, let's see, the close was 13.81, and I can see this coming all the way down to 11.4. I would put my stop at 15.06. It's about $1.50 to potentially, I guess, $2 or so, $2.50. So it's better than a 1-to-1 risk-reward ratio, which is good. But I just see Under Armour continuing its downward descent. So that kind of concludes my analysis for today. Thank you for watching, and I plan to be back tomorrow. We'll see what happens in the markets. Thanks very much.